Okay, a quick look at the bearish harami. The bearish harami is a bearish reversal pattern. Anytime a pattern is bearish, you're going to want to find it at a market top in overbought market conditions, at resistance. You want to look for a swing high, obviously, and maybe not so obvious, but that's what you're looking for. Swing highs, at resistance, market tops, overbought conditions. These are always going to make a bearish reversal pattern more successful. With the bearish harami, the first candlestick in the pattern is a continuation of the prevailing uptrend. However short or long term this trend may be, it could be a daily chart, could be a weekly chart, could be a 5-minute chart. But no matter what, the overall trend direction is bullish. Then we get this little candlestick right here. Okay, this candlestick is going to open below the close of the previous day, and it's going to close above the open of the previous day. The wicks don't really matter as long as the real body is inside the real body of the previous day, and that's the real body, not the highs or the lows. Then what we look for is the reversal, and in many cases, here's how you would identify entry into a position like this. Potentially, you identify the bearish harami, and this is your signal that a reversal is potentially going to take place. You then draw a line at the low of the beginning candlestick in the pattern, and that's your trigger entry short for your bearish position. You look for price to close or move beyond this trigger, and there's several ways you can use the trigger. One is as soon as price moves beyond it. Another is once price closes below the trigger. And oftentimes, if for example this is a intraday chart, that's easy. But if it's a daily chart, what you might consider doing is if price is closing late afternoon and it's 20 or 30 minutes before the market close, or even 5 minutes, and you're going to stick with the close beyond the trigger, then you can enter on the same day a few minutes before the market closes with the confidence in knowing that it's probably not going to move down before it closes and get you in a little early. So that's the bearish harami. That's a typical trigger on a bearish harami, and again, what we're doing with the trigger is we're letting price action confirm the bearish tendency and the end of the previous trend. The trigger allows price to confirm that for us, and that's the bearish harami.